Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
All right, we're going to hear about a couple of tech-related stocks this time around, and it'll become more apparent why I say tech-related as we hear from each of our strategists, Ben Rains and David Boren. Ben, it's your first time at the desk, so welcome.
Welcome. Thanks for having me, Terry.
What are you covering?
I'm doing Salesforce.com today, and Salesforce is a company that's full of buzzwords. It's cloud computing, it's enterprise software, it's customer relationship management, which is CRM, which is actually their ticker. So this company really did kind of start a new business that's become insanely popular, and it's something that I see really growing for a long time because in the sense that every company now is having to digitize, big, small, in between, and Salesforce is allowing them to do this without really any back-end work on their on their own part. So they don't need the tech support. They don't need all of this back-end infrastructure. They're just using Salesforce. All you need is your computer and internet connection, and you have this massive infrastructure on the back end that's all through the cloud. And they've been growing very steadily. I have 25% average revenue growth year over year every quarter for 4 years. Wow. So it's really impressive stuff. I have this chart pulled up, and it's almost mind-blowing to just see this just steady growth. And the company is expected to report their fourth quarter results at the beginning of March this year. We're expecting at Zacks 25% growth again on the top line, and then big bottom line growth, 60% on the bottom line. So they're steadily growing, and it's a business that really is going to be more popular as every company, no matter how small or big you are, has to continue to go to this digital everything.
Okay, well, thanks for that. Dave, you are making one of your rare appearances here at the desk as well. Cree Incorporated. Now, we classify it as a semiconductor stock, but you tell me that they're into more than just that.
Absolutely. And I'm going to go in a little different direction here than Salesforce. I think this might be a complementary stock in a portfolio because unlike a giant with these sort of steadily rising earnings, Cree has been in the past very much a boom and bust stock. So this represents a growth opportunity at this point. But it is a little bit more volatile than the big stocks like that. It's a $5 billion company.
Okay.
Where most people are going to know the name Cree from probably is LED lighting. They sell consumer goods. Previously, they had a deal with Home Depot where if you went to Home Depot and were buying LED lighting products for your home or business, they were going to be a Cree branded product. And they were also fairly expensive. Now, there was a value proposition where there was enough of a savings on replacing the lighting products and on the power that you save that they were worth the money, even at a considerable multiple to an incandescent light bulb. Okay. But they were the victim then of price competition from some very, very low price foreign competitors in the LED space that hurt them. So we're going to see that their stock was $16 in 2009, was $80 in 2010 as people started to really get into this LED lighting sensation.
And talking about the stock, and maybe you can help us out with this, it's in a bullish trend right now, right?
Absolutely. This is a big growth stock. It's got an A for growth and a B for momentum. It's definitely in a bullish trend. It's about 50% higher than its 52-week low.
That's what I read.
And what we're seeing here, if I can show you on the PCE chart, is some steadily declining earnings estimates. And then for 2019, you can see the brown line, those earnings estimates have snapped right back into shape. And it's a Zacks #1 rank, strong buy. There's a kind of a simple explanation for this. Cree has a division called Wolfspeed. It was initially going to be spun off in an IPO in 2015. They scrapped that. They were going to sell it to a German company. And that sale was blocked by the U.S. on national security concerns because Cree is a military contractor. And some of their power solutions and radio frequency solutions are sold to the United States government. And that is the division that's growing fastest. So here we're going to look at the most recent income statement. Okay. You can see that LED products are about flat from 2017 to 2018. Lighting products, about flat from 2017 to 2018. The Wolfspeed products, and this is the power, RFID, and the stuff that goes to the government, almost double the revenue between 2017 and 2018. That's a big reason that we're seeing these earnings estimates come up. Yeah. So this is not a cheap stock. This is a 65 multiple, forward PE, 65 multiple stock. But it's got the earnings growth, and it's still small enough that this could be a big winner for the foreseeable future.
All right. Do either of you own either of these?
I do not.
I do. I own Cree personally.
Personally. All right. Thank you both for that. And welcome back to Dave, and congratulations on drawing the short straw.
Thanks for
joining
having me.
us here at the desk. We'll see you again
Thanks, Dave.
as time goes by. Don't forget, more stock information on our website, Zacks.com, for you to check through. Get on over to the homepage and start looking. With Ben and Dave, I'm Terry Ruffalo.